In this presentation, we will write checks related to expenses and prepaid expenses within QuickBooks Pro 2020, QuickBooks Desktop 2020. Here we are in our Get Great Guitars file. We currently have the Open Windows open. You can open the Open Windows by selecting the View dropdown and go to the Open Windows list. We're now going to be entering checks. We're going to be entering checks, and you can think of this kind of like at the end of the month. We're starting to enter our normal kind of monthly routine type of checks, as well as prepayments that may come about for things such as insurance, which is the major example of something that could be a prepaid type of expense. As we do this for the first month, it's going to be a bit more complicated because the transactions will not be saved. In other words, these are things that typically happen each month. You would think if it would, after the first month, it'll save part of the transaction. It'll save at least the account that it will be going to. Here, not so much. We don't have that. Therefore, we'll have to be adding more things such as the vendors and the accounts. And then in the following month, you want to envision how you can set it up so that in the following month, it'll be easier to go forward with. And that's always what you want to kind of think about. It'll happen naturally within QuickBooks, but you always want to think about how can I do something now so that it'll be in an efficient way. So in the future, as I do this repetitive process, as accounting is, we have a system to make it as easy of a repetitive process as possible. So let's first go to our reports. We're going to hit the reports drop down. We're going to go to the company and financial, scroll down to the balance sheet. Within the balance sheet, we're going to change the dates up top to the customized reports. We're going to go to the dates of 01/01/20 to 12/31/20, January 1st to December 31st, 2020. Here's going to be our balance sheet reports. Obviously, the major account that will be affected here is cash will be going down as we write checks from it. And then the next report, we're going to go to the reports up top. We're going to go to the company and financial. We're taking a look at the profit and loss standard. Within the profit and loss standard, we're going to change the dates from 01/01/20 to 12/31/20. Here's the profit and loss. When we write expenses, we're going to have to be adding a whole bunch of expenses. Notice we do not have any here yet. However, we do want to be checking that if they're there or not, they will be on the chart of accounts. So notice the expenses is where the biggest, most amount of accounts are. It's also where the biggest mess can happen. So we want to basically plan out the expenses as best as possible. If you're new to expenses or new to the system, you probably want to rely fairly heavily on the QuickBooks system and the list of expenses that they have provided. In other words, when we write a check to someone, we first check whether or not it'll fit into the list of expenses that have been provided to us. If not, then we go ahead and add a new expense, as opposed to basically just saying, I'm just going to add a new expense every time, which is, I can see how that would happen, right? Because everything looks like a little bit different, and we may not consider how it will fit into the current grouping. And it really depends on how much customization and specialization you want to have. However, the more accounts that you have, the more detail on the expense sides that you have, the more time it will take to go through, and it'll be more of a tedious process. The less accounts you have, then the less detail possibly you will have, but the easier it will be to enter, the cleaner it will be to look at, in essence. Okay, so, and then we're going to open up the trial balance. We're going to go to the reports drop down, accounting and taxes, and the trial balance, changing the dates once again from 01/01/20 to 12/31/20. Here is our trial balance, a little bit cleaner for us to see this information. The first thing we're going to do is look at a check for the insurance. Now, insurance is that one item that is kind of a prepaid. It can cause confusion to a lot of people. What should we do with insurance? Why? Because most expenses, like the utility bill and the phone bill, we pay monthly, and therefore we pay it pretty close to when the actual service was provided to us, and therefore we just write it as an expense at the time we write the check. However, insurance, oftentimes we always pay for insurance before we get the service, which is a little bit different. The service doesn't mean they have to give us money for an accident or something. They're giving us coverage. The coverage is the service. But the service doesn't happen until the future, and we pay in the present. Now, it's not a big timing difference if we pay monthly in insurance. We can do the similar process and simply basically expense it at the time we pay it. It's pretty close. We're probably okay there with the timing. However, if we pay for a whole year's worth of insurance or 6 months worth of insurance at one sitting, at one date in 1 month, then if we just simply write it off as an expense, what'll happen is, for example, if we write it off in January, January will have 6 months of insurance expense, which could be a significant expense. February will have 0. When we do a comparison of January to February in terms of performance on the income statement, it'll look like February was much better than January simply because February had no big insurance cost of a 6 month of insurance cost. And that's not really fair, and that's not really good for us to do a comparison period over period. And so that's why we would deviate typically from a cash basis, which would do that, to an accrual basis, in which case we would say, yeah, I know I paid it in January, but I'm not going to dock February for it. I'm going to say February still consumed what we used in January, and therefore I'm going to allocate the insurance evenly over the time period that the insurance was covered, so that the periods that were covered have the allocation of the expense that they consumed, they used in order to help us to generate revenue in that time period. That's the matching principle, or the expense recognition principle. So in essence, insurance, typically what we want to do is we want to put it into a prepaid account and then do adjusting entries at the end of the time period. It's a little bit more time consuming to do it, but that's the most proper way to do it in terms of the best way to read the financial statements. So that's what I would recommend. If you don't want to go through that tedium of doing that, or if you just pay monthly and you think that it's pretty close anyways, then you could just write it off like any other type of expense. If you do happen to write it off and you pay a large amount, if it be insurance or anything else, if you prepay a large amount that's going to be something for a long period in the future in 1 month, and you just want to expense it because it's easier, you can do that, but then you want to basically, every time you review the financials and look at January compared to February, you got to go back into net income and say, hey, why is February worse? Well, then you got to think and pull out all the things that are basically prepaid type expenses that you expensed all in one period. You got to say, well, why is it worse? Because insurance, I paid 12 months in this month and I didn't pay it any in the next month. So if I remove that from the picture, how does it look January to February comparison? So those are the pros and cons. So we're going to do it kind of the proper way. We're going to put it into a prepaid asset account, and then we'll do an adjusting entry at the end of the period. So to do that, I'm going to go to the Home tab. We're going to write checks. We could do this in the check register. I'm going to actually write the physical check this time. So I'm going to go to the check down here, or we can go to the banking and the write checks up top. Now we're going to go take it out of the checking account, of course. The check number should populate on its own. We're going to do this as of January 28th, so that will be the correct date. Actually, this should be 2020. Hopefully, I'm going to change that finally, I'll change that. So it should appear at 2020 next time. And then we're going to put this into the insurance company. Now, we haven't paid the insurance out of the system yet, therefore it's not here. It's going to be called Safe Insurance Company. That's a generic name, obviously. So we're going to put in Safe Insurance. Now I'm just going to type it in and add it. So I could go to add new here, but I'm going to type it in and then add it. So insurance company, there it is. Now I'm going to select tab and it's going to say, hey, do you want to add this? I'm paraphrasing. And I'm going to say, yeah, I want to add it. And we're going to do the quick add, not the setup. So just a quick add, that's all we need. It's going to be a vendor because this is someone we pay to. They provide us a service of insurance. That looks good. Now we're going to say the amount that we're going to pay them is $11,000. So it's $11,000, and it's for multiple months. It's not just for 1 month here. So $11,000, and we'll deal with basically the adjusting entry at the end of the time period. So whenever we pay for insurance, and you'd probably want to put in the memo here, this is 12 months liability insurance. So that's probably something that's worth putting in there. And then you can go back into it when you do the adjusting entry and say, okay, how much has been consumed? We'll talk about that when we do the adjusting entries. So it's going to go into insurance. Now, if you select the drop down, it's a little bit tricky because you'll see, oh, there's insurance expense. You could put it to insurance expense, but then you'll be expensing 12 months of insurance expense today, which will distort January as compared to February fairly drastically, although it's the easy thing to do. But the proper thing in these situations is typically to put it to a prepaid insurance. You'll notice there is no prepaid insurance here. We're going to set up prepaid insurance. Prepaid insurance should be an other asset account, other current asset type of account. So I'm simply going to type it in there, prepaid insurance. Then I'm going to say tab. Hopefully I spelled it right. We are going to, and QuickBooks says, do you want to set that up? And we're going to say, yeah, please set that up. And it chooses an expense. Why? Because we're writing a check. And normally you have an expense when you write a check, but it's not an expense. This is going to be an other current asset type of account. So I'm going to select the drop down here. It's going to be an other current asset. We're going to continue. And that's, it looks good. I'll just tab through it. Everything looks good. Not a sub account. Yeah, everything looks good. We're going to say, all right, save it and close. There we have that. Again, in the memo, you might want to put something like this is 12 months of insurance. There we have it. And then we're going to say save and close. Now, what's going to happen when we record this? Obviously, the checking account is going to go down. The other account is going to be a prepaid account. It's going to go up an asset type. So let's do that. We're going to say save and close. Let's check it out. We're going to then go to the balance sheet. And if we go up to the checking account, double clicking on the checking account, we see that the 11,000 is there, decreasing the checking account. That would make sense. Closing that back out. Perhaps the more confusing side is that the other side went into prepaid insurance, an asset account, not an expense. Why not an expense? Because we haven't consumed it yet. They haven't given us our service yet. They're going to give us the service over the next 12 months. So at this time, we have an asset, meaning we're going to get a benefit in the future of the service of liability coverage for 12 months. Therefore, we put it here. As we get that service over the 12 months, we'll then take this and allocate it out to the profit and loss in the form of expenses. We'll do those with adjusting entries at the end of the period. If we take a look at the profit and loss, then no effect now. However, we will be doing adjustments at the end of each month to record the effect in a periodic system. This might be easier to see, of course, on the trial balance. Now, the next thing we're going to do is something similar, another kind of prepaid type of account, and that's going to be supplies. We're going to put something into supplies. Now, when you think about supplies, notice you could be thinking about like like office supplies, staples, or something like that, small supplies. And when they're small in dollar amount, when we purchase them, what would we do? We would say, okay, let's just write a check, cash would go down, and the other side would go to an expense called supplies of some kind. However, if we have large supplies that we're stacking, if we're stacking a lot of paper for like, again, a long period, like a year, or if we have a lot of ink for a year, or if we're in a medical service and we have a lot of medical supplies, and we actually want to track those medical supplies a bit more efficiently, and when we're going to be using them, then we would want to use a similar kind of system as we did here, in that we put the item into prepaid. So if we had supplies then, and we bought supplies for a year, if I bought enough ink for a year, and it cost a significant amount of money, then instead of expensing it all in January at the point of purchase, we would want to do a similar kind of thing. We would want to put it on the books as an asset. We might not track it we're not going to track it in QuickBooks basically as an inventory asset, but we're doing a similar type of process as we would with inventory, you'll see here, right? We're going to put it on the books as an asset. We're going to have it in our warehouse. We're going to count the inventory at the end of the time period, determine how much we have consumed each month, and then take it out of the supplies and record it as an expense. We'll do that in an adjusting entry process. So this is another one on supplies that you want to basically consider. What's the best system for you? If it's in material, if supplies are small to you, if you buy a box of staples or something like that, it might be a box of staples for 5 years, but it still might not be worth your while to put it on the books as an asset, then count it and determine how much you have consumed, even though that would be the most proper thing to do under an accrual basis method, because it's just not worth your time to do that. It's harder to do that. But if you are tracking something like medical supplies or something like that, then it probably would be worth your time if you had to put all the supplies on the books that you're going to be using for the next 6 months or something. Then you would want to put the supplies on the books as an asset, and as you consume the supplies, counting the supplies at the end of the time period, seeing how much has been consumed, you would then decrease the supplies in the time period in which the supplies were consumed, not when you purchased them. So similar kind of process here. So you may want to just expense the supplies when you have them. Note that if you do that and you buy bulk supplies for a long period of time, you will have a similar distortion as we talked about with the prepaid insurance. If you want to account for that, as we will do here, the more proper method is an accrual allocation. However, it takes a few more steps to do. That means we're going to put the supplies on the books as an asset, and then at the end of each month, we will then expense the portion of those supplies that we have used. That's what we'll do here. We're going to go to the home. We're going to go then to writing another check. So I'll write the check down here. It's going to come out of the checking account. It's going to be the check number should populate there. That looks good. And the date looks good. We're going to buy these from Staples, which is like an office supply store. So I'm going to select the drop down. It's not here. I'll type it in, Staples. And then I'm going to select tab. And then I'll quick add the Staples. And it's going to be a vendor that we will have. So we're going to say it's going to be a vendor. And the amount that we're going to spend is $500. $500 for the Staples. The address is here. We are in the expense tab. Now, if I select the drop down, there's going to be something for office supplies, but it's an expense. So if you wanted to expense this, if 500 is something that you would want to expense here in month 1, even though it might be something that's used in the future, that's fine. However, if it's something that you want to allocate more evenly or as it's consumed, then we're going to put it into the prepaid, and that's how we'll practice it here. This is the standard method. The supplies is often kind of an introduction in accounting to basically inventory tracking because it's a similar process that we will be using here. So we're going to put it into office supplies, but we want to put it into a prepaid account. So I'm going to call it prepaid office supplies, prepaid office supplies and tab. And then I'm going to set that up. And it's not going to be an expense. That's the default because we're in a check here. It's going to be, once again, an other current asset. So other current assets is what we want. And then we will continue. And everything looks good. Let's tab through it. Looks good. Everything looks good. Okay. Then we're going to save and close. And there we have it. So we're going to say save and close. What's going to happen when we do this? The checking account's going to go down. And then a prepaid expense is going to go up. Let's check it out. Save and close. We're going to go then to the balance sheet. And within the balance sheet, if we go into the checking account, double clicking the checking account, we see that the cash is going down by the 500. Double clicking the 500, there is the check. Closing this back out, closing this back out. The other side is going to go to the prepaid account, which we set up, which is going to be prepaid office supplies. So it didn't go to an expense. It's on the books as an asset. When are we going to expense it? When we consume it. How are we going to know when we consumed it? We're going to count the supplies at the end of the time period, see how much is left compared to how much we purchased, determine how much we had consumed, and then write it down and an adjusting entry process at the end of the month. So that means that at this time, nothing is on the profit and loss. And just so you know, if you do write the supplies off as an expense, that's fine too. Just note that the difference between those two methods. If you're writing office supplies for a large period, a large amount of time, it can distort, the first period to the second period when you're comparing expenses. And then the trial balance might be a little bit easier to take a look at as well. Next, we're going to write the electric bill, which is going to be a bit more straightforward. It will simply be an expense. We're going to write a check, and the other side is going to be an expense. Why? Because we usually pay the electric bill monthly, right after we consumed the electricity, and therefore it's proper to expense it at that point in time because that's when we used it. So we're going to go then to the Home tab, and we're going to write another check, and I'm going to write this. It's going to come out of the checking account. It's going to be 1008, and then January 28th is going to be the account that we will be using, and we're going to write this to Edison. That's going to be our electric company, Edison. And it's not there because it's the first month, so we're going to add it. Notice all these vendors will be there next month, therefore it'll be a lot easier of a process, and we'll see that as we go through the next month. We're going to quick add this. It will be a vendor once again. We're buying electricity in essence. The amount is going to be for 620. And then the other side, and you may want to put a memo. I'm not going to put a memo here, but memos are good. If you give it any more detail, you can give more detail. And then the other side is going to be an expense. So we're going to select the drop down. Going to say, hey, is there an expense that we have? Also note here that in month 2, once we select the expense will populate as we choose Edison. So we'll choose Edison, and then the expense account will populate automatically, which is nice. Going to select the drop down then. We're looking for an expense. Now, typically we would use utilities. Note that if you didn't select the drop down, you might be tempted just to put electric expense or something like that. That wouldn't be wrong. But I would think about going through the expenses and checking the most appropriate expense account first, because that might be the easiest way to go. Some companies might actually want to break out the utilities from the electric. Usually utilities includes electricity and gas. And then the telephone, most companies break out the telephone, although you could include that in the utilities as well. So it's up to you if you want to break out. That you could have a good reason. You might say, hey, I'd like to track the electric bill separate from the gas bill and the phone bill, and I want to call it the electric expense. That's fine, but just note that's the decisions that need to be made. Do you want more detail? Do you want to break that out or not? If you break it out, it's going to be a lot more expense accounts. If you break a lot of things out like that on the profit and loss, can be more difficult to look at. However, you get that more detail that you could have within it. So my suggestion would be to first look at what QuickBooks set up in the chart of accounts and think about it. Think hard on your first time, the first time you enter this information, whether or not that account is appropriate and what you think is going to happen going forward as you record a lot of transactions. And then think about, how do you want this thing to look next time? How easy do you want the data input to be as you look next time? How convoluted do you want the reports to look like? And then if you think that you should deviate from the accounts there, then deviate from the accounts, create a new account. Okay, so I'm going to say save and close. If we check this one out, we go to the balance sheet. We're going to say that the checking account, double-clicking the checking account. Now we have the utilities there for Edison, double-clicking that. There's the check. Closing this out, going to the other side on the profit and loss. We see the first expense we finally have here, 620, selecting that. There it is. Closing this out. Might be easier to check these things out if you get used to looking at the trial balance, because both of them will be in the same area. Checking account, utilities down below. Next, we're going to enter the phone bill. Same kind of process. Now, when we enter the phone bill, you might think, maybe that'll go into utilities as well. It could. You could put that into utilities. But because the phone is somewhat significant, most people will break that out. So we'll check that out. We'll see what QuickBooks has in terms of the phone bill. So let's go to Home tab. We're going to go to the checking, write checks, and it's going to come out of the checking account. Check number is good. The date is good. And we're going to write this to Verizon. We're going to say Verizon's our phone company. So Verizon is our phone company. So I'm going to say tab. We're going to add that. So we're going to quick add that. It's going to be a vendor. So that is correct. I'm going to say OK. The amount's going to be for 360. And then the account, which will populate next month once we set this up in the first month. If we select the drop down, we say, I don't know, telephone. Do we see something here for telephone? We can even try typing it in there. We can say, let's type in telephone, and there it starts to populate, right? Telephone expense. You can tell it's an expense account over here. That looks good. So QuickBooks already had set that up with this chart of accounts that it started with as we selected the industry. So we're going to pick that. That's the one. I'm going to say save and close and check that out. Save and close, back to the balance sheet to see what happened. If we go to the checking account, we're going to say, all right, checking account, there's the 360 for the telephone, closing that back out. Profit and loss, checking out the profit and loss. We could say, all right, there's the telephone. Notice the ordering of it is within the expense categories. It's in alphabetical order. So it's in order of obviously income and then expenses, but then within the expenses, alphabetical order. So you can change that with account numbers, but we might do a separate thing on account numbers later. And then you can see both of these. If you look at the trial balance, here's the checking account. Here's your two expenses down below. So now that we have everything input, I'm going to make an adjustment to it at this point in time and just show you how easy it is to kind of adjust something within QuickBooks. And we've seen a little bit of an example of these in the past. I want you to note to be careful with this kind of adjustment, because in a lot of times in accounting software, they won't let you basically make adjustments like this, but in QuickBooks they do. So you want to be aware of that. There's pros and cons with it. And so, for example, if we then came back in and said, if we took this, say, to our supervisor or something, and they said, yeah, but we don't really want to have, you did a good job, we got all the checks printed, that's great, but we don't really want to have this prepaid office supplies. We'd rather just expense it because this amount is immaterial. We don't think it's worth our time to be counting and tracking the office supplies. We just expense it as we purchase them. So it was good to put this in a prepaid account, but we don't want this in a prepaid account, let's say. And we're going to say, all right, well, let's fix that. How can we fix that? What do I want to happen then? Well, the check's already written. That's fine. What I want to happen is for this account not to be up here, but rather to write it to a expense account called supplies expense, just writing it off in the current period. So how could we do that? Well, we could just go right into the detail. I'm just going to double click on this. And then here's our check to Staples. I'm going to double click on this. And the check's okay, everything's fine, the check's fine, we could send that out, but this account down here is all we need to change. We could change this account. So then I'm going to go into here and say I don't want it in the prepaid. I would rather take it down here to the office supplies expense account and just simply change that. Now, the more proper way to do that is to actually do a journal entry or something like that, because that will give you the audit trail of a change like this. But the easy way to do it with QuickBooks allows you to, just go in there and make that change. And we'll say, all right, change that. And we're going to say save and close and okay. Closing this back out then, now you can see that it removed, it took it out of the prepaid account and we record it down here in office supplies. So you can make changes like that, and that's what we'll keep with as we move forward, have it here in office supplies. If I go to the profit and loss then, you'll see that, of course, that's going to be in the expense category now, as opposed to the prepaid account. So this is what we have so far. We're currently in the balance sheet. You can check these numbers out just to double check where you're at. So this is where we're at. If we go to the profit and loss, this is what we have in the profit and loss. We currently have a loss. That's okay. We're going to go to the trial balance, and this might be the easiest place to kind of just double check your numbers.